So good afternoon, everyone. Thank you so much for registering and joining me for this webinar today. I want, as I go through this webinar with everyone, I want you to participate. And if you have any questions or comments that you would like to mention, just utilize that webinar chat box you have in front of you and ask any questions. Okay? So today we'll be going through how to sell to singles. So how many people here love selling to families? Well, you obviously know as agents, the needs are easily identified. It was back then, and it is now. The advertising has changed, obviously, but the demographics in America have certainly shifted, and so have the life insurance needs. Just like as you can see in these pictures of the ads that you have in front of you, you can see that the demographics in America have changed, where there's people who have children but aren't married, and more Americans are now single than ever before, and also they're actually single by choice. So as you can see from here, approximately 64% of Americans over 18 years of age are now single and have never been married. And 47.6%, so that's 59.8 million of households, are maintained by unmarried men and women. And in 2016 alone, 35.4 million people actually lived alone. So you can see that culturally and socially, marriage and having children are being actually delayed until later ages, if they even happen at all. So more and more people are happy to be single, and this is shown by the surveys that have been done. And so while it's true that demographics have changed, life insurance needs are still, have changed as well for singles. And we're going to go over and identify those life insurance needs that can open up a new market for you, which means you'll be able to reach out and target more single people. So how many times have you approached a potential client who is single about life insurance, only to hear them say, I don't really need it? And to be fair, when I was single and I was not married and I didn't have any children, I remember someone coming over to me and saying, do you have life insurance? And my response straight away was, no, I don't. I might be interested in it later, once I have children or when I get married. But now, to be fair, I don't need it. And that was my response, because I honestly believed I didn't need it. I thought, if something happens to me and I die, then it doesn't really matter, because, my parents have life insurance, they're okay, and it's not like I have anyone else that needs to be protected. But now, looking back, if someone had approached me at that time telling me what the benefits were, what the needs were, then I know for a fact I would have opened up a policy back then. So here are the uncovered needs. So funeral expenses, medical expenses, supplemental savings potential, and legacy. So the needs might look familiar to you, but it's really how you position them to singles that matter. And it's really how you explain it and approach singles to explain this in detail for them to really understand that, yes, there is a need. So let's look deeper at each one of them. So let's go with the funeral expense first of all. So no one really likes to think about, the funeral expense. But the truth is, if you die, someone's going to have to pay for your funeral. And you don't really want to leave your parents, partners, or other family members struggling with grief as well as paying for funeral and burial, which actually they've done a survey, and in 2017, on average, a funeral expense, the cost of it is going to be $15,000. So that's a lot of money that the family member will have to, be burdened by if no one has left that for the funeral expense. And so let's look at the debt. First of all, let's start with a student loan debt. If you have a student loan debt, many people assume and believe that your debt is going to die with you. And to be honest, I thought that and believed that too as well. But that's not always going to be the case. If you went to college, I know in America, so I grew up in England, but when I came over, I didn't realize going to university in America is very expensive. And that's why most students will come out graduating with a huge student loan debt. And while the loans through the federal government are discharged and they're forgiven if you were to die, personal loans that have a co-signer, if you basically get a loan from a third party or a bank, then if you have your parents who co-sign it, for example, then even though you die, you're not going to die with the student loan. The parents who have co-signed for it will be responsible for the loan, for the debt. So that means if something happens to you and the loan has not been paid in full, when you pass away, your parents are going to be burdened. Whoever co-signed it are going to be burdened with this debt. And there are instances where the bank has called for the loan to be paid in full immediately following a death. And you really don't want to leave your parents dealing with this grief and the loan payments on top. And also credit cards and auto loans and mortgages. There's so many things that you need to think about. So when you're living together and you're living with your significant other, a lot becomes shared financial responsibilities. So say, for example, you need both your incomes to meet mortgages or rent when you're living. So have you really thought about, or this is how you can approach it to people as well for singles. Have they ever thought about what happens if one of you died prematurely? Then would the other partner have to sell up, find a new place to live immediately? Because, that's another extra payment that they have to really think about. So this is just one example of many shared financial responsibilities couples have to deal with. So adequate life insurance is an easy answer to these questions. And medical expenses. So that's another huge expense that people, are burdened with. It's very expensive in America. And unlike in the past, today, very few people die without some type of medical intervention. And medical bills are not forgiven upon death and are taken from the remaining estate. And so life insurance can actually provide a pool of funds outside the estate and probate to take care of these expenses. So as you can see here, the stats, end-of-life hospital care in the US costs on average $18,500. And more than 40% of patients who die of cancer are admitted to the ICU in the last 6 months of life. And these are the things you can approach and explain to singles and why there is a need for life insurance. So with insurability, most people will likely never be as young or as healthy as they are right now. And so purchasing life insurance at a younger age locks in lower rates for future protection. And the cost of life insurance obviously increases as people age. So that's age and health are two major drivers of how much you'll be paying for life insurance. So why not lock in a low price if you have both of those working for you right now? And so did you know that a healthy 30-year-old can get a 20-year $250,000 term life insurance. So this is just easy example. A 30-year-old getting a 20-year term life insurance for a face amount of $250,000. They'll only have to pay around $15 a month. That's really doable. $15 a month, and they would have $250,000 in death benefit. So you don't want to wait for later on, because that will increase as they get older, and also you don't know what their health will be like later on. So when you approach a single person and you say, do you want to get some kind of life insurance now? They might say, no, I don't need anything right now, but maybe, later on when I'm married, or 10 years time when I have children. Why not lock in something right now so they can start with a smaller premium and they'll be healthier? So another way is you can leave a legacy. Charities or other non-profit organizations can be left a lump sum of money from a life insurance policy to help fund help them in the future as well. So a legacy can also include leaving funds behind for family members, friends, your loved ones, to fund travel, education, or anything else that is important to the insured. And there's supplemental savings potential. But another thing is, you can ask when you approach a client, if they're single right now, you could ask them, one of the questions is, do you plan to have kids in the future? Or, maybe later on, do you want to have kids? And if they respond and say yes, it may not be now, but later on, if they are planning to have kids, you could actually tell them, according to the USDA, it costs on average just under $250,000 to raise a child, just one child, up to the age of 18. And that's not actually factoring in the cost of university and college funding for them. So getting life insurance in place now means that you have coverage in place for when you do have children. Plus, you protect your insurability for the future. So there's many products out there, obviously, but one of I would say my favorite product will be our best-selling IUL product, Flex Life 2, the Index Universal Life product. The great thing about that is they can start, the policy issue age is from 0 to 85. So someone who is young can start, contributing a low premium and know that in the future they'll be accumulating cash value. So they'll be accumulating cash value that they can use for college funding, for their children, for medical expenses. If they want to buy a house later on, they'll be able to get a loan from their cash value growth at a tax-free loan as well they can do. And also, if they have children in the future, that's something they could think about as well. So that's why you can explain to each individual that it's not just protecting for the future, it's not just for death benefit, but they can accumulate cash value so that they can use it for tax-free retirement, for their medical expenses, for their future children. So there's so many ways that they can utilize life insurance. And living benefits. Living benefits, as you all know, the accelerated benefit riders. Those are riders that are automatically added onto the policy at no additional cost to the clients as long as they qualify. And in the event of, a qualifying terminal illness, chronic illness, critical illness, and critical injury, we have these living benefits. And also, we have what's called a lifetime income benefit rider. And that means the clients will be guaranteed income for life from the ages between 60 to 85. They can accelerate that lifetime income benefit rider. And once they accelerate that rider between the ages of either 60 to 85, then they will be guaranteed income for life as long as they fully funded their policy of the IULs. So that's a great question, Yasmin. So one agent has asked, are these automatically included or are they additional charges? So living benefits, the accelerated benefit riders, which are the critical illness, critical injury, chronic illness, and terminal illness. Those are not additional. They are added onto the policies at no additional cost to the client. So all of our products, apart from the second to die product, so all other products such as the IULs, the Index Universal Life product, the term, the whole life, and the fixed ULs, all of these products will have these accelerated benefit riders added on at no additional cost. So the lifetime income benefit rider, that is offered for our IUL product, and that is automatically added on. So they don't have to add on. It's not another rider that they have to add on. This will be added on automatically. So it's just a matter of the client calling in between the ages of 60 to 85 whenever they want to accelerate the rider. So say at 70, they decide they don't want to contribute any more premiums, they're going to retire, and they want a guaranteed income for life. At that point, they can call up and say, I want to accelerate that lifetime income benefit rider. And then we will figure out how much they put into the policy, and the Inforce team will calculate how much we will be able to guarantee them every single year. And that amount that we offer them when they call in will be guaranteed for life. Perfect. Any more questions on that, on the lifetime income benefit rider? Okay. So that's how, someone has also asked, does that mean term policies? Would that include the ABRs? That is correct. Like I said before, all of the living benefits will be added on to all of the permanent and term, which is a temporary product. As long as the clients qualify, yes, at no additional cost, the ABRs will be added on. That is correct. So how do you as agents get the conversation started when you meet your potential clients? When speaking with clients, it's so important to speak about things that are important to them or things that concern them. So it's important to do this at the beginning of the conversation to get their attention. So what a lot of agents I know, what they do is that they show the prospective clients the puzzle piece and say to them, would you agree that these are the three most common financial concerns that people have? What happens if they die too soon? Will your family or your loved ones, will they be protected? And then you can ask them also, what happens if you become ill or you get into an accident? What happens if that unforeseen circumstance happens where you get cancer or you have an injury? Do you have enough savings planned out for that unforeseen circumstance where you become ill? And if the client responds and says, well, I haven't really thought of that, I haven't got anything saved for that, then you could show them this puzzle. And if the client ends up living a perfect, long, healthy life, then do you have tax-free retirement planning set up? Do you have enough money set up so that when you retire, you'll be happy with what you've saved up? So most people will probably say they don't have enough saved up. So this is a puzzle that you can show them at first, and then say that you have a solution for them. And then you can go into depth about certain products that will be tailored to their specific needs. Yes, so Edward asked, can we get a copy of this presentation? So yes, Edward, and everyone else, what I'm going to do after I've finished with this webinar is I have all your email addresses already. So I'm going to send out an email with this PowerPoint. So everyone who is registered for this webinar will get this PowerPoint sent to you. Okay? So someone has asked, can you convert term to Flex 5.2 later without affecting insurability? So the great thing about having term is it's affordable, and some people might not want to get life insurance straight away. But if you open up a term and say to them that it is convertible later on, yes, you can convert to a permanent product later on. So for example, if a client gets a 10-year term, they have within the first 10 years to convert. If a client has a 15-year term, then the client has the first 12 years to convert. If the client has a 20-year term, they have within the first 15 years to convert. And if the client has a 30-year term, they have within the first 20 years to convert to a permanent product. So a Flex 5.2 is a permanent product, so yes, they will be able to convert it later on. And what they can convert is, say that, for example, today the client got a term of a 20-year term product, and they got a rate class of preferred non-tobacco. Then they have so if it's a 20-year term that they got today, they have within the first 15 years to convert. And during that time, say 5 years down the road, they get cancer and their health is really bad. We will still honor that preferred non-tobacco, and they will be able to convert to a permanent product, and we'll honor that preferred non-tobacco rate class later on. Yes, the new price will be based on the age when they do convert, but we will honor that rate class. Does the client have to go through underwriting? So the only thing is they would still have to fill out a health questionnaire, but no, they wouldn't have to go through a paramed. We will honor that rate class they originally got. Someone is asking, the income is taxed, correct? When you say the income, which income are you talking about, Kara? So with life insurance, so say any cash value accumulated in the policy, as long as they haven't surrendered the policy and the policy hasn't lapsed, they can actually get a tax-free loan from the policy, and that will not be taxed. And remember that with life insurance, any death benefit, if a client passes away, the death benefit that is paid out to the family would not be taxed. And remember, if they get the living benefit, so the ABRs, so if they get cancer or any illness or injury, and they get an advanced death benefit paid out, that would not be taxed because it will be an advanced death benefit. So Deborah is asking if a client can only convert part of their term. So if they only want to convert a part of their term, they can do that. So yes, if you have a 500,000 term and you only want to convert 300,000 into an IUL and you want to keep 200,000 remaining in the term, then the premium will be calculated and it will be reduced accordingly. So the premium will be calculated from the original age when they've got the policy. So say, for example, you got a 500,000 term today and you were paying a premium of $50 for easy numbers. And say in 10 years time, you want to only convert 50% to a permanent product. Then we would reduce only 50% of the premium, which means it would reduce from $50 to $25. So loan, Kira is asking, is a loan not taxed? So no, because you're getting a loan from the policy. And as long as the policy is still in force and you haven't surrendered or you haven't lapsed on the policy, then no, you would not be taxed. If you withdraw from the policy, then yes, that will be taxed. But if you're taking a loan from the policy, that will not be taxed. But remember, if you end up surrendering the policy or the policy lapses, then whatever gains you may have, that will be taxed. So you can convert your NL term or a LSW term. Both are convertible to a permanent policy. Okay? Yes, so what we do offer is we also offer term out, where if it's from another company, I will be able to, so what we can do is, unfortunately, we only have 30 minutes today for this webinar, but any questions that you do have in depth, such as like the term conversions or the term out programs, or any specific questions you may have, please feel free to give us a call on the pre-sales desk, which is, the number is 1-800-906-3310, and we'll be more than happy to answer any specific questions you may have. And what I'm going to do now is, after I've finished with this webinar, I'm going to email you with the PowerPoint of this webinar, and we'll be more than happy to assist you with any more specific questions you may have. Thank you so much for attending this webinar, and thank you so much for all the agents who give us so much business, and we do appreciate everything that you do. So you have a great day, and please feel free to reach out to us, and we'll be more than happy to help with any questions you have. Thank you, everyone. You have a great day now.